Hello traders, FX Bright here, the trade guru. So on today's video, I will be teaching you guys about my Cypher pattern and how you can use this pattern to milk the market. Whatever it is you're trading, whether synthetic indices, forex, crypto, whatever it is, it works on all trading platforms. So if that's something you're interested in, like and subscribe. So I'll see you guys after the intro and the disclaimer roll. Okay guys, welcome back. So to get the Cypher pattern, price is going to first of all make an impulse move. Now we are dealing with the bullish Cypher pattern. So price makes an impulse move. Okay. Then we're going to take the retracement of this leg. So assume this is where it starts from. This is the origin. It makes an impulse move to the top, and now it's going to be retracing. So we're going to take a measurement of the retracement and where a Cypher pattern's retracement should be. So we're going to take the Fibonacci retracement, put it from the bottom, stretch it all the way to the top. So I'm just going to put it here so you can see it very clearly. So now what we want is as this market is retracing, coming down, we want this leg to touch the 38.2 Fibonacci but not close below the 161. So I'm just going to put that leg there so you can see exactly what I'm talking about. When the market is retracing, you can see, like, assume this is it retracing right now. You want this leg that is retracing to break through the 38.2 Fibonacci. So you can see where I am right now is the 38.2 Fibonacci. This line, if you look at it here, you can see the reading here is 38.2 Fibonacci. You want it to break through the 38.2 Fibonacci, but you don't want it to close below the 61.8 Fibonacci. So if you look here, you will see the 61.8 Fibonacci. You do not want this price to close below it. You want it to break through this 38.2, but not go and close below this. So you want it to be somewhere in the middle. Now you can have the wick of the candle go below, but the body of the candle must remain above the 61.8 Fibonacci. So let me drop it somewhere around here. All right, so I'm just going to remove this Fibonacci so it becomes clearer. So the next thing the price is going to do is that the price is going to continue the upward move. So I'm going to put that, right? I'm going to put that. So the price is going to continue the upward move. Remember, we have not started trading it yet. We are just taking the measurement to be sure it's a Cypher pattern. Then we will now begin to know where we'll enter from, and I'll show you guys that. So this is how I trade the Cypher pattern, guys. So now the market breaks through and starts going up. So what we want this particular leg to be, we're going to take a Fibonacci extension of this particular leg and where we want it to stop, right? So I'm going to bring out the Fibonacci extension. This is the Fibonacci extension, and you're going to put it from the origin to the end of this first leg and drag it back all the way to the beginning. So look at what I'm doing here. I'm gonna place it at the origin, drag it to this top, then drag it down all the way to the origin. Are you saying that? I'm just gonna stretch it all the way here. So if you look at this particular leg here, like I said, what we want from this leg is for it to break through the 127 Fibonacci, but does not close above the 1414 Fibonacci, right? So you want it to break above the 127 Fibonacci, but you don't want it to close above. If it closes above the 1414 Fibonacci, then this is no longer regarded as a Cypher pattern in my strategy. So it's going to break through this, but it won't close this. But of course, we can have a candle wick closing above, but the body of the candle must remain below 1414, but must break through the 127 Fibonacci. All right, so testing this leg, we can see that this leg is an accurate leg, right? So now I'm going to remove it. So now the last thing we want price to do is we want this we want price to begin to drop down, right? And we're going to measure the leg. We're going to do a Fibonacci retracement from here all the way to this top in order to get the retracement of the last leg. So see what I'm talking about here. We're going to take up our Fibonacci retracement tool from this bottom all the way to the top. Okay, sorry, no, this is the extension. Let me get the Fibonacci retracement. You take the Fibonacci retracement from this bottom, drag it all the way to the top. All right, good. So what you want is for when the market is coming down from this point, you want the market to come down all the way to touch the 78.6. So if you look at it here, you will see 0.786. So this is called the 78.6%. No, this is the decimal representation. So if you change it to percent, it's 78.6%. So you want it to break through the 78.6%. Around this point is where you begin to look for your entry. So this is where you want the market to get to, right? This is where you want the market to get to. So you place your buys around this side. So if you're going to take your entries, you're going to find your entries around this point. So guys, this is how the Cypher pattern looks like, right? This is how the Cypher pattern looks like, and these are the measurements for how to trade the Cypher pattern. And so what you do is you find your entry around this point and take your buy positions for the market to go up. So all you will find is that the market from this point will begin to go up. So at this point is where you're going to take your take profit. So you're going to see the market moving up like this, and you're going to take your profit. So how do you take your profit? How I like to take my profit is I like to take my profit at the 61.8 Fibonacci. So if I draw these retracements from these high points to this point, to this low point here, right? So as the market is going up from here, I like to take profit at the 61.8 Fibonacci, so I can decide to trail the stops all the way to the 100 Fibonacci. But this is where I take my take profit, and I keep my stop loss just below my entry in this pattern. All right, guys. So let's go into the chart so we can find some other examples. All right, guys. So let's take a look at this example. So you can see, take a few seconds to see if you can spot the Cypher pattern that happened here. All right, guys. So if you look very closely, you will see that this is a potential Cypher pattern, but we're going to measure it to see if it was as accurate as we would have liked to predict. So what we're going to do is that we're going to measure this retracement. We're going to measure this retracement here and see if it got to the 38.2 Fibonacci. So I'm going to this impulse leg here. So I'm going to measure that retracement. So you can see that this retracement just touched the 38.2. So if you can read the numbers here, you can see this is the 38.2, and that wick just about touched the 38.2, and that's enough, right? As long as we can get a touch on the 38.2 and it does not close below the 61.8 Fibonacci, then we have a very good leg of a potential Cypher pattern. So the next thing we're going to do is that we're going to test this leg, and I told you how we test that leg is to draw a Fibonacci extension from this first leg all the way to this top, then we draw it back to the first leg, right? So when we draw it, so you can see just about, you can see we want this leg to touch the 1272 Fibonacci, but does not go above the 1414 Fibonacci. So you can see we have a candle wick that just about pierced through the 1272 Fibonacci, right? So this is a good enough leg. So remember, when this happened, and this one happened, the next thing we'll be waiting for is for the price to drop down. Now when the price begin to drop down, is at this leg we'll begin to find if this leg can be able to touch the 78.2 Fibonacci retracement. So I'm going to delete that one. Then I'm going to try to measure the leg with the Fibonacci retracement. We're going to put the beginning from here, and we're going to stretch the Fibonacci retracement all the way to this top. Now you can see that this leg touched the 78. So if you can read it from this point, you can see this is the 78.6 Fibonacci. So you can see this leg touched the 78.6 Fibonacci, and that's where we're going to be taking our buy from. So the moment this market made this move, we tested it, it came down, we tested, and now we made this move all the way to this testing point. So at this point is where we are going to be finding our entries for a buy in this market. And if you like taking orders, sell or buy orders, it's at this point you'll be placing your orders. All right, so how are we supposed to exit this market? How we're supposed to exit this market is we're going to take a Fibonacci again. We're going to take the Fibonacci of retracement of this leg, right? And we're going to exit at this 61.8 Fibonacci, which should fall somewhere around this point, right? So you will take the Fibonacci retracement from this leg all the way to this last leg. So I'm just putting it at this point, but I'm just stretching it all the way. I'm ensuring that leg is on the top of that candle wick. Ensuring that it's connected to this candle wick. So how I like to take it, when you take your buy on this leg, you're going to buy all the way to the 61.8 Fibonacci. So you can see how it just got to the 61.8 Fibonacci and started crashing down. So this is the main point you're supposed to hold your trade to. So sometimes if you know how to handle your trades, you can try to trail your stops, but this is the main place you're supposed to exit. And if you understand price action, just looking at the left of this point, you can see how price was like has some good resistance and support zone around this area. So that's your 61.8 became a valid spot for you to exit the market. Now if you're going to be taking your trade around this point, your stop loss is supposed to be below the first leg. So for instance, this is the first leg, this is the first impulse leg we used here. So your stop loss is just going to be below that impulse leg, right? So somewhere around this point, you take your trade all the way to this point, and you get a good profit on this particular trade. Okay, so just to make it a little bit more Cypher patterning, so I can just put this one here, so you can see clearer. Put this here and drop it. So this is how the Cypher pattern looks. So this is the leg we traded and made the profit of this particular place. So basically these patterns are like M structures, but we're not trading this last leg of the M, we're trading after the finished leg of the M. So with very specific Fibonacci ratios. So okay, let's see if we can get another example. All right guys, so let's take a look at this example, and so just take out a few minutes to see if you can be able to spot the Cypher pattern happening here. And this one might be a little bit difficult to spot, but that is part of the learning process. So you can see how the price was able to move all the way from this point to this point, drop, had a retracement, and came all the way to this point and started coming down. The moment we can be able to see something that looks like this and the price coming down, we've been able to know that there is a potential Cypher pattern. So what we're going to do is that we're going to also come back to test this the moves with our Fibonacci to see whether they meet with our Cypher pattern requirement. So you can see the market moved from here to here and made this retracement. So we're going to come and test this retracement to see whether it meets with our Cypher pattern requirement. So we're going to come here, use the Fibonacci retracement tool, put it at this bottom, and drag it all the way to the top. So remember, what we want from this leg is that the leg will come down and break through the 38.2 Fibonacci, but will not go below the 61.8 Fibonacci. So you can see this is where the 61.8 Fibonacci. So if you look to this point, you will see the 61.8 Fibonacci here. You can see how price was able to close above it. So like I said, you can have the wick breaking through it, but the body of the candle must close above the 61.8 Fibonacci. And obviously you can see it broke through the 38.2 Fibonacci here. So we need price anywhere here. So which it has done. So this leg is in accordance with our Cypher pattern. So we've been able to validate that leg. So the next thing we want to do is to validate this top to see whether this top is also in accordance with what we would like our Cypher pattern to be. So I'm just going to go ahead and delete this one here. Then I'm going to use my Fibonacci extension to try to test that top. So how we're going to do it is we're going to put the first point here, put the second point here at this top, and drag it all the way down, extend it. So you can see this point, how this price was able to break through the 1272 Fibonacci, but does not go above the 1414 Fibonacci ratio. So like I said, the price can go into the 1272 Fibonacci, but must not close above the 141. Obviously, we can have a candle wick that goes above, but the body must close below the 141. So this is a valid leg of the Cypher pattern. So now what we can see is that the price is now coming down. So now what we said is that this last leg, we are going to validate it by using a retracement, and we will take our trade, or we'll begin to look for very good buys when the price gets to we'll be looking for very good buys when the price gets to our 78.6 retracement. So I'm just going to delete this one here. So as the market from here begins to drop down, we're going to take a Fibonacci retracement from here all the way to this point to try to get this retracement. And like I said, we're looking for a 78.6 thereabout before we start finding our buy. And if you're taking like orders, you can be able to put your orders around that point. So we're going to take our Fibonacci retracement and drag it all the way from this point all the way to the top here. So you can see how it is. So as the market is dropping down, we're going to be examining it. Remember, we want the market to get to the 78.6 Fibonacci before we start looking for our buy. So you can see how the market was able to did some. So we won't be taking the market at this point. Why? Because we're waiting for it to get to somewhere here. So somewhere around this point is where we'll probably start looking for our buys, right? But you can see how we're supposed to take this trade is when you find a good entry for a buy here, you'll be able to put your stop loss below this last leg, this first leg. Remember, this is the beginning of the leg. So your stop loss will be somewhere below it, right? So if you were able to find a buy somewhere here, you can put your stop loss just below here, just below that leg, some few pips below it. Then you have a then you take your take profit to about 61.8 Fibonacci. So let's assume you were able to find your entry here, and there are different ways to find entry, guys, but I will not go too deep into entry finding. I'm just trying to teach you guys the general my way of trading this Cypher pattern. So what we're going to do is put your stop loss somewhere below here. You get an entry around this point, right? Your stop loss being below here. You take your Fibonacci to get a TP, take profit zone at about 61.8 Fibonacci. So how I do it is I get a Fibonacci retracement from this top, drag it all the way um, to maybe you got the entry somewhere around this point. So you drag the Fibonacci all the way to this top, and your exit is supposed to be around 61.8. And you can also try to hold the trade if you know how to trail your stop loss to get to 100. But this is your main exit around the 61.8 Fibonacci. So you might suffer a little bit of drawdown if your entry was here about this point. But definitely these patterns almost always work. I'm telling you, they work about 90% of the times. So you can see how the market will just spring all the way up to give you your very, very good profits, and it won't even hit your stop loss. So guys, you can go on and do your back test on this particular strategy and see how you can even optimize it for yourself to take better entries. But this is how I trade the Cypher pattern, so you can go ahead and copy it. All right guys, so I'll see you guys in my next video, and thanks for watching.